For a moment, put everything aside and think about this. There's hardly a single country in the world that is not in debt. The United States has $38 trillion in debt. Japan's debt is over $9 trillion. Even the European Union has around $14 trillion in debt. Even countries known for their oil revenues are in debt. So, doesn't a very strange question arise here? If everyone has debt, who gave out all that money? Let's think about it for a moment. I owe you money, and you owe someone else. And of course, that person owes someone else too. In the end, who is at the end of the chain? This is where things start to get interesting. Many people think that the world is indebted to China. But contrary to popular belief, the truth is far more interesting. In fact, the world largely owes money to itself. Sounds kind of ridiculous, doesn't it? But you'll understand why in a moment. Our story goes all the way back to 1694. England and France are at war. The treasury is empty. Gold is running out. The king has one pressing thought on his mind. How am I going to finance this war? Then merchants step forward and say, "We'll give you the money now, and you'll pay us back with interest in the future." The king agrees. And with that, the foundations of modern government debt are laid. In fact, this is the moment when the modern financial system is born. In other words, a huge part of the economic system we use today originated from a war. Now let's come back to the present day. As we mentioned earlier, the United States has $38 trillion in debt. People immediately say America is in debt to China. But the reality isn't that simple. Most of America's debt isn't held by China. It's held by Americans themselves, banks, pension funds, investment funds, insurance companies, even the Federal Reserve is part of it. So in a way, America owes money to itself. Now things get even more interesting. Japan lends money to the United States. The United States lends money to other countries. Those countries then invest their money back into U.S. Treasury bonds. It's a bit like this situation among a group of friends. Japan lends money to the U.S. through Treasury bonds. The U.S. lends money to Europe through the IMF. Europe lends money to developing countries through the World Bank. At some point it becomes difficult to tell who owes whom. The global economy works like a much larger and far more complex version of this. But here's the real point. Most governments have no intention of fully paying off their debts. Yes, you heard that right. But it's not illegal or some secret conspiracy. That's simply how the system works. They issue new debt to pay off old debt. Then they issue more debt to pay off that debt. And the cycle continues. It's somewhat like paying off one credit card with another credit card. The only difference is that it's happening on a scale of trillions of dollars. So why doesn't this system collapse? Because everyone believes the same thing. These debts can be repaid. In reality, what keeps the system standing isn't money, it's trust. The system works because people continue to trust it. But if that trust disappears, that's when interest rates rise. Markets panic. Economic crises begin. We've seen examples of this in Greece, Argentina, and Sri Lanka. And in the end, we're faced with this reality. The world's largest financial system is actually a giant network of trust. Governments issue debt. Banks multiply it. Investors trade it. Citizens support it through their taxes. And everyone keeps making the same promise. Don't worry, I'll pay you tomorrow. Modern economics is largely built on those promises. And perhaps the most interesting question of all is this. What would happen if one day everyone stopped believing those promises at the same time? Actually, we just mentioned these examples in Greece, in Argentina, and in Sri Lanka. When trust disappears, everything changes. Interest rates rise, investors panic, governments struggle to borrow money, and suddenly a system that looked strong begins to crack. But here's something even more surprising. Most governments aren't actually trying to pay off all their debt. Yes, you heard that right. The goal isn't to eliminate the debt. The goal is to keep it going. Old debt gets paid with new debt. Then new debt gets paid with even newer debt. And the cycle continues. At first that sounds completely insane, but that's how the modern financial system was built. Think about Japan. Its debt is now more than twice the size of its entire economy, and yet the system keeps running. Why? Because investors still trust it, and that's the key to everything. The global economy doesn't run on money, it runs on confidence. As long as people believe the promises will be honored, the machine keeps moving. Governments issue debt, banks multiply it, investors trade it, and the rest of us support it through taxes, savings, and pensions, which leads us back to the question we started with. If everyone owes money, who is the creditor? The answer is stranger than most people expect. It's not China. It's not Wall Street. It's not the IMF. It's all of them. And it's us. Because the modern financial system has blurred the line between debtor and creditor so completely that it's often impossible to tell the difference. In the end, the world's largest financial system isn't really built on money. It's built on trust. And trust is a promise. A promise that people believe will be kept tomorrow. The real question is, what happens if one day they stop believing? If this video gave you a new perspective, don't forget to subscribe. History is filled with answers, waiting to be discovered. I'll show you where to start looking.